Glad to have you back. The fall of the Naira has had a significant impact on Nigeria's expected export earnings. That's even in 2023. According to a report, the value of the Naira has been consistently under pressure due to low inflows from oil sales, remittances, and foreign capital. Experts, however, have talking about say there is still hope for Nigeria's economy. Yes, according to them, the federal government must take steps to increase crude oil production in the country, strengthen the value of the Naira, and attract foreign capital. But for me today, I want to look at the non-oil space. What are the opportunities therein? And I'm being joined by the lead consultant and chief executive officer, 3T Impact Trade Academy, Dr. Bamidele Ayemibo. He's an expert in this export field. Thank you so much. It's good to have you on the program.
Thank you very much for having me. Good afternoon.
Well, good afternoon. I think we'll start with the present state of Nigeria's export market. Before now, I knew a lot has been done, or is being done, and has been done to improve the lots in that sector and make it more productive for Nigerians. But considering global issues that we face, and even the domestic issues affecting our economy, what's the present state of the export market?
Of course, the issue you raise is affecting it. I mean, the NEPC executive came up to give us the number recently, telling us that there is a decline in the volume of export, in the value of export, even though there was an increase in the volume, which speaks to the fact that we do a lot of commodity export, but it confirmed the fact that there's a decrease in the value. So here are the numbers. So number one, we have an increase in the number of metric tons, I think about 600,000 extra, increase in metric ton of export, but the value declined from about 4.8 to about 4.5, if I'm not mistaken. So there was a decline in the value. But it's also interesting to know that the number of items exported increased from 214 in 2022 to 273 in 2023. That's talking about the export basket of Nigeria, different product that Nigeria is exporting. But the truth is that we've not done well. We didn't do well last year. For a lot of reasons. They gave a number of reasons. The issue with border issue we had during when we had issue with Niger, a lot of good that would have gone that could not go because of border closure, because of the coup in Niger, issue with quality, a number of reasons were given. But those reasons, apart from the issue of coup in Niger, were issues we've always talked about that have always happened. But in recent time, and that's talking about the outlook for 2024. The issue in the Red Sea, caused by the challenge of Houthis attaching ships that pass through the Red Sea and Suez Canal, is becoming a big challenge, even though there's a global coalition around trying to salvage trade through that route. But the fact still remains that 50% of world trade passing through that route is currently under serious threat. And that will affect us and every other person doing trade in the world. And the implication of that is vessels going from that are supposed to go to Europe to supply whatever it is that will be needed to produce whatever we are going to even buy eventually in Nigeria will be coming to us at a higher cost. We're already having inflationary issues. We're likely going to have more of that if that issue is not solved.
That is scary, Dr. Ayemibo, I must tell you. Yes, it is scary. Let's stay home now and see all efforts. You mentioned the Nigerian Export Promotion Council and what's being done. Nigeria intends to diversify, or has been talking about diversification away from oil for some time. Now that the president is really focused on raising more money from the non-oil space, what sort of conversation are we supposed to be having now, to maybe, let me say, encourage the exporters to be able to key into this business, make it more easier for them, documentation issues, packaging issues. What sort of conversation are you expecting, Dr. Ayemibo?
The government's job is to formulate policy to grow trade. And there are tools that the government have handhold of that the government can use to drive up trade. We have trade promotion as a tool, we have subsidy as a tool, we have exchange control as a tool, we have quota as a tool, we have tariff as a tool, we have trade agreement and a host of others. For trade agreement, we are always signing that. We've signed the FCFTA, we have signed different agreements. Now, the real issue is to begin to ask, what do we need to do? For example, let's take trade promotion, for example. I think the president needs to give a charge to all his ambassadors. There must be a deliberate effort by the president to ensure that the ambassadors double their trade in the country they are going to, whenever they're going to be appointed. And the reason is obvious. We need to grow trade, right? The ambassador is supposed to be selling Nigerians in that country. So maybe a KPI that says if you don't double trade of Nigeria in terms of export to that country within the next 1 or 2 years, we are going to replace with someone else. I mean, that the kind of thing that the president did with the minister, have an MOU signed and agree. Because we need to drive this thing from the front. Because we have cases where we want to do trade mission in the country and the embassy of Nigeria in that country are nonchalant about what we are coming to do in that country. So we need to fix that first of all. So we need policy around trade promotion such that the ambassador know that, look, this is something they must take serious. Number two, in that same embassy also, you know, something happened recently. An embassy of a European country in Nigeria, one of their staff did a program with us, a certification program in export business management. And I was shocked because he's a Nigerian, but working on the trade desk of a foreign country's embassy in Nigeria, because they have a trade desk that promotes trade into Nigeria. We need that to be revived in Nigeria embassy in every country. So if I want to ship to Vietnam, I want to ship to China, I want to ship to India, I want to ship to UK, Europe, wherever it is, I should be able to have people I can reach out to the embassy, send them a mail, and they can give me information I need to be able to trade with that country. Now, these are things we've not been doing, and I think we should begin to look out for. Now, another issue I want to raise, which I've always talked about, I mentioned on your show last year, I mentioned it again this year. Because of the issue in the Red Sea, there has been an increase in the cost of doing export business. Freight charge. I used to do freight to UK, 1,000, 1,000, 1,003. The last time I checked, 1,900 euro to ship a 20 by 20 foot container to the UK. If you compare that with the cost of exchange rate, that is not making export interesting also. So we need subsidy. Now, subsidy that government can trace, an intervention program that government can trace, not the kind that's happening with the ministry in the social investment program, such that every shipment being done, the shipping line is paid a particular percentage to reduce the cost of shipment of goods out of Nigeria, among a number of other things that I can talk about later on.
Interesting. It's really getting more interesting. And let's shift to adding value. Yes. Let me ask you this question, Doctor, and I know you should be interested in talking about it. Adding value to resources is something that has been so worrisome. Even the president came out to say plainly, let me read it to you. He said, era of exporting raw materials out of Nigeria is over. But are we ready to begin to add value to some of our resources so that we can get more of course, we'll get more proceeds if we add value to it, instead of exporting and bringing back finished products to sell for ourselves here?
We can do it, and it's possible. The reason we complain about it before is because of infrastructure, power, and the like. And I've maintained everybody don't have to be in that particular part of the value chain. So, for example, look at what I saw in Leicester in the UK. If I have, for example, plantain, I want to export plantain chips. Government have organizations, there are organizations supported by government who, if I bring in my plantain, raw plantain into their factory, they will do my design, they will print my packaging, they will do the filling, they will do the frying, they will do the packaging. When I come back in a week or two, I'm going to get my plantain and I will pay per unit. You know what that does for me? It removes from my head the challenge of quality, because it's a massive factory producing for everybody that is interested. That is the kind of things we need. Everybody don't have to be the one to do that production. We need to set up industrial hub and private sector to be able. So those people now will be supported by government. Whatever fund they need, whatever support they need for power, infrastructure, whatever that need, everybody can then be on the queue and they can process different products. We now have to be strategic and say, okay, we are choosing 3, 4, 5 products to process into secondary product, because secondary product demand in the world is actually a lot more. So that we're also careful in that rhetoric. So when we're talking about adding value, we don't just wait that we want to add value to the finish. Not that it's not good to finish, but we should ask ourselves, we need forex, right? $24.5 billion. $24.5 trillion. That is the total trade in goods. Trade in services is about $6 trillion plus. Out of that, about half is intermediate product. About 25% is raw materials, and about another 25% is finished goods. The intermediate product now are from cocoa to cocoa butter, from shea nut to shea butter, from lead to lead ingot, from zinc to zinc ingot. Those intermediate products, the demand is increasing, particularly by developed countries that doesn't want those primary products to press in their country. That then gives us an opportunity that we should add value, but we can also decide to focus on adding value, maybe to secondary level, even to tertiary level. I think it's okay, but we should now do it in a way that we set up industrial hub where people can take their raw material too, and then value can be added from there for export. So I don't have to be worried about power, road, infrastructure, and every other thing that people can entrepreneur face when they're in the production sector in Nigeria.
Brilliant. Well, you've touched on Forex. I spoke about that earlier in my discussion. But now I want to ask how it affects the export market. How has it also been? Talk to us about it.
It's a big challenge, but somehow there's a balance up, because if I want to export, I don't do only few exporters that have foreign input in their packaging and raw material. We have to deal with the issue of Forex, which is why I encourage, if you are an importer, you need to be generating your Forex by going into export. Now, for your freight payment, because freighting is an offshore service, they are also paid in Forex. So sometimes I have to go and buy Forex to pay. But because the Forex also has gone up, when I get export proceed, I'm also able to get a reasonable margin. Now, the challenge is this, and this is for CBN. We need to do something about the way we are regulating the Forex market. During the Obasanjo era, Soludo era, we have full liberalization, which gives a sense of psychologically available Forex. I say psychologically available, not that it's available like that, but when there's a level of liberalization, hoarding is reduced. Currently, people hoard it. Some people that have no business with foreign exchange, they don't earn it, they don't trade in it, but they hoard it to preserve their wealth. But if people can freely sell, and there is more supply in the market, maybe we can see it coming down, and then encourage people also to be able to go into export and generate more Forex. But all in all, because of course the rate is going up, it's balancing up for exporter, but at the end of the day, it's still a cost for export transactions, particularly those that need to pay in Forex for any input or any service that is experienced in their value chain.
So it's, of course, we're in 2024, moving on very quickly, and a lot of expectations for the year, particularly now that we have a spending plan. That's our budget for the year, and government needs to raise money from the non-oil space, not just oil. Yes, of course, oil is still a major contributor to Nigeria's economic, but we need to improve the non-oil sector. What is your outlook, considering business as usual and considering things being done as they ought to be done? What do you think will be the outlook for the export?
I will quote the line of the last speaker. I need to see what the Minister of Trade and CEO of NEPC are putting on the table that they want to do. They've said a number of things, but I've not seen in clear steps. This is the vision we have. This is the step we are taking to achieve that vision. This is what we are going to do to achieve that vision. I need to see policy around increasing the number of exporters, increasing the number of exporters in Nigeria. The number of exporters in Nigeria is very low. The people that exported 2022 is 1,172. This year, we are still waiting for the data from NEPC to know the number of companies that do export. In other clients, some countries in Africa are doing more than 10,000, 15,000 exporting companies. So we need to increase the number of exporters. But I need to see what is the policy direction, what exactly is the CEO, that's Ms. Noyen, what he's trying to do, and also the Minister of Trade. Those will let us know. But if I'm going to talk without what they are trying to do, it doesn't look nice considering what is happening in the Red Sea. It doesn't look nice with what economists are telling us that dollar SNA is going to get to about 600 to 800. It doesn't look nice at all. But before we close, I would like to say this. It would be good. I think this was one of the things Obama did when he became president of America, that Jagaban need to consider this. We need a CEO executive that report directly to the president and brief him on what is being done. Because sometimes we have sabotage within industry. A good example I've made on your show before is pan increasing the rate of airline to generate income because he has an income target, whereas that is affecting the freight charge of shipment from Nigeria. So we need to decide. We want to increase income, right? We want to increase government revenue, right? Which is good. But we need to also balance it out. Why we're trying to increase that revenue, is it hindering the growth of forex, which is also driving up inflation and making the government not to seem to be doing much about the issue?
All right, Dad. Interesting conversation. In 1 minute before I let you go, we've heard of the export expansion funds and a lot of funds being provided to expand the export base, improve exporters' participation in this business. How well have we been able to manage these funds, and what more are we expecting with regards to funding?
That is part of the policy on subsidy for trade that I talked about earlier. Export expansion grants a brilliant initiative, but it's not well funded by the government because of revenue challenge. It's a big challenge. So I think rather than focusing on initiative and subsidy that are very high, can we look at other areas to still reduce cost? Because at the end of the day, we are not seeing much. At every point in time, government always have backlog for export expansion grants. Backlog for export. And that for me also is a sign that it seems as if priority. So it's still early in the day. By the end of this year, we'll be able to know what the new administration is, because then they will have spent at least a year and we'll be able to judge the policy direction. What I mean by that is we need to see that the administration is deliberate about the support for the non-oil export by taking the payment of the export expansion grant seriously. But I think to avoid corruption, can we tie directly to transaction? Directly to transaction. For every transaction you do, government is supporting in a particular area and the money go directly to the like freight company, shipping line, airline, who are carrying those goods, or any service that is engaged that the government is reducing. For example, rail. Moving goods from the north to the south, we should be using rail, and the partnership with Railway Corporation to reduce the cost of freight from the north to the south. Those are the kind of things I am looking at seeing to drive down the cost, and also policy that make export more interesting and increase the number of exporters in Nigeria.
I must thank you so much. Interesting conversation with Dr. Bamidele Ayemibo, lead consultant, CEO, 3T Impacts Trade Academy. Thank you so much. We'll see you very soon again on the show.
Thanks for having me, and bye-bye.